Hey everybody, this is Jason Matthews, your financial advisor guru with Matthews Financial Insurance Solutions. Right now, we're doing a market recap of the month of August. So every month, we just try to talk about market recap of what's happening economically and how it affects you, your business, your family, your community. So we're about to go ahead and get started. Thank you guys all for taking your time out just to be on this. I think this is very important right now as we're going through times that we have not seen in 40 plus years. So once again, my name is Jason Matthews. I'm with Matthews Financial Insurance Solutions. I am the president and CEO of Matthews Financial Insurance Solutions. And like I always like to say, I really try to do this. I really want to do this on a monthly basis to keep everybody updated about what's really happening right now in the world of money and economics. So let's go ahead and get started and get this ball rolling with it. So let's look at the three major equity or stock indexes and what they did in the month of August. So the first one that most of us know or recognize is the S&P 500, which stands for the Standard & Poor's 500, which is the 500 biggest publicly owned companies in the United States. So in the month of August, it was down 4.2%. Now, the Dow Jones average, which is the biggest 30 companies we have, is down negative 3.9% for the month. And then Nasdaq, which is for the technology tech companies, they're down 4.6% for the month of August. Okay. So when we look at that data and where we stand year to date, let's really look at that. So we're looking from January 1st to August 31st. This is where we stand right now. So the S&P 500 is down 17.02% for the year. The Dow Jones average is down 13.29%, and Nasdaq is taking an astronomical, crazy hit of 24.47%. So it has almost lost a quarter of its value since the beginning, January 1st till August 31st, which is profound. But there's always negative news, but you know there are some winners. So in the midst of this, there's been 5 big winners in this. And the top performing stocks have been Constellation Energy of 23%, EPAM Systems up 22%. And these initials behind these are how you are able to buy these stocks or the initials to buy these stocks on whatever brokerage firm you use. Cardinal Health is up 19% for you. Nielsen Holdings is up 16%, and AES is up 15%. It's very interesting right now that the companies that we see a lot that are up right now are all predominantly is held by energy companies. As we all see that our energy prices for our cars, our homes, our gas bill, electricity bill have went through the roof during this period of inflation. Now let's look at the negative. The stocks that have been taking the biggest hit. Ball Corp down 24%. Solar Edge Technology down 23%, Match Group down 23%, Catalent down 22%, and DXC Technology is down 22%, but which performed the worst in the month of August. So let's talk about the Recession Watch. We hear everybody talks about recession. So the question is the U.S. headed for a recession? That's the most likely scenario for 2023 is. And we went from being a soft landing, which we heard the most powerful man I always say in the world, the man who have the power to print money, Federal Chair Jerome Powell was saying, to now we're in what some people consider a growth recession. Now, according to a survey published in the Wall Street Journal, nearly half of the comments, 49%, believe the U.S. will see a recession in 2023. And that number is expected to become a majority when August data becomes available. Now, that's a stark contrast from just a little bit over a year, July 2021, where only 12% of economists surveyed thought the U.S. economy was headed towards a recession. So based off of that, we're seeing that economists are now more about recession than they were a year ago, drastically a lot of them. So 1 out of 2 now compared to just about 12%. But those fears have been stoked recently by Federal Chair Jerome Powell's speech at Jackson Hole, and where he reiterated that the U.S. will likely experience some pain as the central banks will continue to target inflation and we'll see increase in rate increases. So I know this is talking about the month of August, but just yesterday, the Eurozone just increased its interest rate 75 basis points. So we're not the only ones in a recession. The whole world, or not in a recession, but inflation. The whole world is seeing some type of inflation right now, which is very interesting. So it's not just an American problem. This is a worldwide problem. Now, we might have some of the highest inflation rates in the world, but just know that we are not the only one that's seeing inflation. So this graph right here, this chart you're seeing, is what economists felt about inflation. And we've seen from July 21, where we saw 12%, we see the numbers are keep going up and up. And I wouldn't be surprised when the next survey comes out that this be over 50% based off the trend. So let's talk about this word that we all hear, we all talk about, which is inflation. So while we're eager to await August inflation numbers to set to be released on September 30, we do know that the latest data show that annual inflation rate dropped to 8.5% in July. That brings the good news about from the 9.1% inflation we saw in June, the highest rate that we've seen back in 1981. So July 8.5 inflation rate is also exceeded market forecast, which anticipated 8.7%. Despite the hope that inflation has peaked, big slowdowns in the energy sector, new vehicle prices, air fryers masks still are masking higher food and shelter products amount, among other things. Food prices rose at the fastest rate since May of 1979. Let me say that again. This is crazy because we all have this. Nobody's immune towards this. But I would say that if you're doing well in life, economically wise, this is not a big problem with you. If you're working class or lower and you're struggling, this is a big one. But food prices has rose to the fastest rate since May of 1979, and used car prices also see a big jump for the month. So I'm not sure if a lot of you guys know, but I really want I want a new car, but I'm being very disciplined on when I get a car, how I do it, and the price I'm willing to pay for it. As I see that, I see a lot of, because of a lack of new cars still on the lot, used prices I've seen have drastically went up. While a lot of places and websites I've been to, seeing Honda, I'm looking at Audi, just the two other ones I've seen, they have a waiting list or a wait period until the car is delivered because we're still having that supply chain shortage. And because we have this lack of new cars, used car prices have went through the roof. Okay. Overall, the consumer price index has been unchanged through July at 1.3, the same as the previous month, and still at a 17-year high. Core inflation, which means inflation without food and energy, remains steady at 5.9%. So let's look at GDP, gross domestic product. Tells you how much our economy is growing. So revised GDP numbers show that the economy did indeed shrink in quarter 2 of 2020, but at a slower pace than originally reported. Preliminarily, we thought it was negative 0.9%, but when we modified it, it was at negative 0.6%. But that still marks 2 consecutive quarters of economic retraction, which historically wise says we are in a recession. With this period of time, January through March of this year, seeing a 1.6 decline compared to Q4 2021. So we are seeing a slowdown. It's not a huge slowdown, but we are seeing a slowdown. If we look at those same numbers, but just for inflation, the GDP fell 0.1% in the same second quarter. Gross domestic income, which is different, however, rose 0.3 in Q2 of 2022, according to the Commerce Department, which was down from 0.5% growth in Q1. So we have been seeing a slight slowdown, which I'm not surprised. If you guys heard me before, I'm going to say it again. Automatically, we should be in a recession. Last year, there was PPP, there was EIDL, there was unemployment, there was a child tax credit people have, and people spend that money. That money is no longer there. So if that money is no longer there, automatically GDP should slow down because simply enough, people don't have as much income as they did last year because everybody had this government money. And there's no more free money that the government is handing out additionally that we know about. So, but now let's look at job and unemployment. These are great. This is very interesting about it. So while our economy is slowing down, let's look at this data right here, which is historically wise very different. So the latest monthly jobs report from the U.S. Department of Labor released Friday, September 6th, revealed as expected the unemployment numbers for August. For the month, we added 315 non-farm payroll jobs, exceeding the number of 298,000. So we got 17,000 more jobs than we expected. That pushed unemployment down to 3.7%, higher than the 3.5% that we now forecast. There are now 6 million unemployed Americans, matching the number of people out of work in February 2020 pre-pandemic. So if you guys remember, during the pandemic, we had this huge rate of unemployment because we shut the economy in the country down. Now we are open back up, and the number from people who are not working is the same as it was right before February 2020. Now, the labor force participation rate, which tells you how many Americans are actually working, also climbed to 6.4% in August, up from 6.1% in July. Now we're looking like we haven't seen this number this high since March 2020. People are back to work, people. People are back to work. July payroll addition revised slightly lower to 526,000 from the reported 528,000. But what's 2,000? We got those type of numbers. So we have seen a 3-month average of 378,000 new payrolls added each month compared to the monthly average of 164,000 in 2019 for comparison. So the biggest winners of all these jobs is one, retail trade up 44,000, manufacturing up 22,000, financial services up 17,000, and wholesale trade up 15,000, and those which made the biggest expansion of payroll in August. Now, housing. We hear a lot of news about housing. I'm seeing a lot of things about housing. So mortgage rates continue to be on a roller coaster. So when I wrote this, when we first came out, the numbers are drastically different than we are now, as 30-year mortgage rates have jumped. But in August, the national rate on a 30-year fixed rate was 5.6, well ahead of the new 5-year mark we saw earlier this month. Rates for 5-year fixed at 4.98% at the time, and adjustable rate mortgage went up 4.51, also increased significantly by the end of August. So yes, these were the averages in the month of August. But today, when we are recording the September 7th, the mortgage rates have drastically changed. So while you do this, do not have the expectation that we're absolutely right, though, as data is drastically changing on a daily basis. Now, if you want the up-to-date, the latest version of this, we do send out a monthly email as soon as the first hits, as soon as possible, before I have a chance to record it. If you want that information, make sure you email us and say you would like this sent out to you. You can email us at jasonmatthews@MFIS.biz. Once again, jasonmatthews@MFIS.biz. But there are plenty of signs that the market is clear, including a waning buying demand, mortgage application levels that fell off a cliff, and frequent price reductions. So let's look at this. What's happening right now? So we're starting to see in certain areas, people are lowering the rate that they're paying for prices. We have seen a drastic amount of application for new homes have drastically dropped down. So we are trying to see, haven't seen the bouncing up. With rates went up, a lot of people are not qualified for the home that they want, that they previously was able to purchase just a year or two ago, because rates have went back. It's starting to go back up to normal levels. So it's just very interesting. I'm not saying we're not seeing a hard market crash, but we are seeing some type of correction. So here's the top issues for affluent investors. One, 51% were concerned about their financial security and retirement, especially right now as interest rates have dropped. Interest rates have risen. Stock market has dropped. 42% were worried that their portfolio will not withstand a market downturn, which was drastically seen. And 40% were worried that they had to create a long-term estate plan. Tax plan was also a major concern among these wealthy investors surveyed. So here's a good quote for you guys. There has never been a sustained inflation in the world history that is inflation above 4% for about 2 years. That had not been the result of unprecedented growth of money supply, which has started with COVID in February of 2020. That Steve Ham, economist forecaster at Johns Hopkins University, explains why he sees the U.S. having a whopper of a recession in 2023 and 2024, which means this. He thinks we have another 2 years of this because we're only in 2022. Now, if you guys have any other information, make sure you guys can get in contact with me. Here's my information. Hope you guys have a good day. Let me know your guys' thoughts on the economy. Let me know how you feel about inflation, the stock market, housing market, equities markets, crypto, whatever you guys feel. Please let me know your guys' thoughts. Anyway, everybody have a good day.